Look at this unbelievable stats. In 2023, 90% of the home buyers regretted buying their house. That is not acceptable. That is unbelievable. This crazy market that we've had have pushed out a lot of home buyers, or they've made them buy homes that they don't want to. What a crazy market. In this video, I'm going to talk about what the regrets were and how, if you're thinking about buying a house, you can avoid these costly and deadly mistakes. We all know the prices have gone up and they are still going up. We know the interest rates have gone up and may go up. We know the inflation was very high. It has come down, but doesn't seem like it. So if you are thinking of buying, don't get forced into buying something, or don't get into a situation where you might have financial trouble down the road. So be cautious, be conservative. Let's look at those regrets that a lot of the home buyers, especially first-time home buyers and especially millennials, are having or may have when they buy their first dream home. If you are well versed, if you know what's happening in the market, if you know what the trends are, you will buy a home that suits your finance and your area, and you can live in the home comfortably and not be a slave to your mortgage payments. So what are the regrets? Let's look at this. 90% of millennial homeowners have regrets about their home purchase. By the way, all these reports that I'm talking about will be coming from Real Estate Witch. So the first regret is a bad location. 27% feel that they got a bad location. And I don't blame them. When you buy a home and when you are rushed to buy a house 2 or 3 years ago, even last year, there were a lot of multiple offers. There's a shortage of inventory. So there's not a lot of homes out there. So a lot of millennials rushed into buying things, bought the first home they could find or get it accepted. And now they're regretting their location. Maybe it's too far from their work. Maybe it's too close to a freeway. Maybe it backs a railroad track, or it backs to a busy street. Whatever the reason, they are regretting that location. The second thing they regret is having bad neighbors. Of course, when you buy a home, there's no discrimination, so you really don't know what you are buying, especially if you buy it in a rush. So the way to avoid having a bad neighborhood or bad neighbors is maybe before you write an offer, or even when you write an offer, the next few days, drive by in the evenings, drive by in the weekends, check out the neighborhoods, talk to some of the sellers or the owners in the area, or ask your friends and family how the neighbors are. That's how you can find a neighborhood, because you cannot tell how your neighbors are going to be. They could be good, they could be bad, or even after you move in, your neighbors could sell a house and you could end up with bad neighbors. It's just life when you buy a house. The next thing the millennials regretted overall is that their interest rates were too high. Yes, that is out of control. And psychologically, a lot of these millennials saw the 2%, 3% few years back. So now when they paid 6% and 7%, they feel they've paid a very high interest rate. It's lucky enough that they were able to qualify and buy a house, but they feel that they paid a higher interest rate. The only solution to that is stay in the house, and as you build equity and as the interest rates drop, you could refinance to a lower rate, but you must have that equity built up depending on how much down you put in. So wait and see, and when you can refinance, you may do so. The other regret, and rightfully so, process of getting a mortgage is very expensive. And yes, that is very true. Today, when you get a mortgage, you have loan points, you have processing fees, you have underwriting fees, you have appraisal fees, and you have junk fees. And that has gotten more and more and more. On top of that, in your mortgage payment, you have property taxes, which go up every year, and that adds up. And the other thing that's of concern is the insurance, principal, interest, tax, and insurance. Insurance is when you have less than 20% down, you have to pay the PMI, which is the private mortgage insurance. But on top of that, when you buy a house, you have to buy homeowners insurance. And as you know, in the last year or so, we are in an insurance crisis. So the insurance rates are going to double or triple. I'm waiting for my insurance to come in next month. And I'm really scared, because I can assure you it's going to double, if not triple, because the insurance crisis, especially in California and Florida and a lot of other states. So yes, mortgage interest rates is a big concern to home buyers, and also to other home buyers like me who's been in my house for 20 years, and my insurance rate is going to triple now. I just can't wait to see how much it is, and I'm going to really argue with the insurance companies to lower it, although they won't. But at least I'll get a peace of mind by arguing with them. One of the other common reasons millennials and first-time home buyers are regretting buying their home is that they bought in a hurry and they did not buy enough of a home. They are outgrowing them home. So if you have one child, for example, you're a married couple and you are expecting another child or a baby in the next couple of years, or that's your plan, think about that ahead. So don't get 1,000 square feet home and then you regret buying that because now you need 3 bedrooms and you bought a 2-bedroom. Or some of the millennials, what they did was they wanted a bigger house. So they went out further out of the metro area because it's cheaper. So now they have to drive half an hour or 45 minutes to an hour. I know some people who are driving 2 hours each way. So all these add up. Again, don't rush into buying homes, and the size of the home is very pertinent, very important. If you want a 3-bedroom home, stick to a 3-bedroom home. If your parents are going to move in, or if your siblings are going to move in, if you're expanding on your family, get a right house at the right time. And if you have to wait a few months and collect more down payment, so be it. And one of the other biggest regrets is that there are a lot of hidden costs that they did not know about. According to this chart, the hidden cost of home ownership also proved to be a source of regret for homeowners. In addition to their mortgage, the average homeowner spends nearly $17,500 annually on taxes, insurance, maintenance, and repairs. That's a lot of money after you purchase a home to come up with that kind of money. And don't forget, on top of those expenses, you may want to start saving for your retirement or for your kids' education or for emergency funds. And that's in addition to the $17,500 on average that it costs. So it is very expensive to buy a house. It is very expensive to make a living with home ownership. So before you buy, be very conservative, do all your homework, talk to a realtor, talk to your lender, and make sure you get all the numbers required to buy a house and feel comfortable about buying the house. You don't want to stretch, and as I mentioned earlier, the last thing you want to be is pay 50-60% of your paycheck on homeowner bills and you become slave to your mortgage. That's not a good living at all. One of the good things is now that you are a homeowner, next time you buy, you'll know how much or how better to buy a home. And as you grow your equity and as you make your payments every month and your principal, you are getting additional down payment. So when you buy a second home, you'll be more intelligent, more educated, more conservative. So when you buy a second home, you will have a lot of more equity than you have right now. So that's the good news after all these bad news that I'm giving. So let's look at some of the numbers, what's stopping the millennials or why millennials rush or why they are regretting. So if you are thinking of buying, you will be well educated on the thinking about the first-time home buyers, the millennials, and what mistakes not to make, and be prepared. So the first thing I want to talk about is that half of the millennials say that high interest rates are a barrier for home ownership. And that's very true because in the last 2 years when the rates went up from 3 to 4 to 7%, a lot of the buyers, not only millennials, but even regular home buyers, second-time home buyers, got priced out of the market and they're waiting for the prices to drop so they can qualify with a lower rate and buy a home. So that is a big factor. The other factor is that a majority of the millennials can't afford a medium-priced home today. A medium-priced home today is $431,000, and that stat is not very interesting at all. The medium US home costs $431,000, but a majority of millennials can't afford that. About 57% plan to purchase a home that costs less than $400,000. And of course, because the rates went up, that's another factor as well. If the rates come down significantly, then a lot of the millennials can afford a medium price home today, or even a higher price home up to $450,000 or $500,000 if the rates come down to 3%. But that's not happening anytime soon. The other thing to consider is that unfortunately for millennials, 73% of boomers also plan to buy a house in that price range, increasing competition for the most affordable homes. 2/3 of millennials, which is 68%, regret not purchasing a home when prices were lower. To own a home now, many would resort to drastic measures including getting another job, moving to a more affordable or rural areas, renting out a room, skipping other debt payments, and creating a GoFundMe or whatever you can do to increase your down payment or your affordability or your credibility on your credit scores, etc. So it is a challenge for millennials, and you have to work hard to just get approved to buy a house and be able to afford a home today. In fact, it's funny, I'm showing a couple a house. They want to buy a house for about $700,000 in Orange County, and both of them have great jobs, and both of them are working as Uber and DoorDash drivers right now just to make some extra money. So it is what it is. It's fair to say that the market has pushed a lot of buyers into buying something that they did not want to. But on the other hand, here's a shocking stat and a very interesting stat. It says that 1 in 9 millennials millennials would still offer 100,000 or more over asking price for their dream home. That is very interesting and amazing to me because one, you are pushing to buy a house as it is, and then when you like a house and there's multiple bids like we've had in the last couple of years, especially last year, why would you pay 100,000 more and stretch yourself even more, even though you can qualify? Because when you do that, you have regrets like we have right now. So I do feel sorry for the millennials, but they need to stop doing this. This is a newer market. This market is not going to change anytime soon. So you have to be very conservative, stick to your price, stick to your standards, stick to your budget. One of the ways you can reduce your payment is to put 20% down. Yes, that is a stretch. So when you put 20% down, you are reducing your loan amount. On top of that, you are reducing your PMI, because if you put 20% down, you don't have private mortgage insurance, which could run anywhere from $100 to $400 a month, depending on your loan amount. So by putting more down, you reduce your payment. But look at this stat. Almost half of millennials won't put 20% down on a home. High mortgage rates may be a barrier to home ownership, but the good news is they are not set in stone. There are numerous ways millennials can lower their rate, including a large down payment on a home. It's true that buying a home or owning a home is the American dream. That's what everybody wants to do. They want to buy a house regardless of the price or the interest rate, but they have to be able to buy it. But look at this stat. 1 in 4 millennials worry they won't qualify for a mortgage. Along with rising costs, significant debt obligations hinder millennials' ability to save. About 85% of millennials have some form of non-mortgage debt, with 22% owning more than $50,000 and 57% owning more than $10,000. That means the percentage of millennials who have $10,000 in debt is more than double the percentage who have $10,000 in savings. This is one of the most shocking stats to me. I can't believe it that millennials are doing that. 2 in 3 millennials would purchase a home with asbestos or mold. No, don't do that. That's disaster. You cannot do that. Mold is dangerous not only for your health, but it's very costly and very expensive to remedy the mold. With a lack of homes on the market, sometimes the best way to acquire a property is to pursue homes that are not in high demand. 2/3 of millennials, which is 67%, would purchase a fixer-upper compared to just 40% of boomers, who are more likely to be able to afford turnkey properties. So we understand that the millennials want to buy a house and they're desperate to buy a house, but they have to be cautious. They can't go buy homes with molds or don't know how much the fixing costs are going to be. They have to be very cautious and very conservative and get the advice of their realtors to pursue further and not make any harsh or impromptu decisions. If you are preparing to buy a house this year or next year, I highly recommend that you work with professional realtors, professional lenders, and if you need a referral for somebody in your neighborhood or in your area, direct message me. I will refer you a top agent in USA in your local neighborhood. I also recommend that you watch this video. It's called How Much Housing You Can Actually Afford. I did this video last week and it'll be very helpful for you if you are considering buying. Again, be careful. 90% of home buyers have regretted buying a house. So if you buy a house in the next few months or the next year, be very cautious, do your homework, and be very conservative. Direct message me if I can refer you to anything or anyone.